At the beginning of 2021, people were generally investing in companies gaining share because of the pandemic. These were digital companies like Amazon and Apple, companies we rely on while we're stuck at home.
In the hedge fund community, there are so-called long-short hedge funds. So they manage their risk by investing in companies they believe in, but then to manage their risk, they had to be short something. And so they were short the brick and mortar retailers where obviously the coronavirus was impacting their business.
But then individual investors, or as Wall Street calls them, retail traders, decided to get involved by investing in a heavily shorted company, GameStop.
GameStop is really the stock that started sort of all of the mayhem in the stock market. It was one of the most heavily shorted stocks on Wall Street, which just meant that a lot of these hedge fund types had been looking at the company for years and didn't think a turnaround was in store. But what happened with Reddit traders who've amassed this sort of huge online discussion board with millions of followers is that they were looking at an activist investor who said he was going to come into the company and sort of infuse it with technology and help it mint a turnaround, essentially.
Individual trading has become a lot easier in recent years with commission-free apps like Robinhood, which allow users to buy and sell stock instantaneously on their phones. These amateur investors continued to use social media to talk and continued to buy stocks. So much that prices went up 800% in 1 week.
As that started to happen, a lot of these Wall Street hedge funds that were betting against the company, they started to get, a little antsy about that. Some of them had to start selling their short positions, which essentially just means that they are buying back borrowed shares, but they are buying back borrowed shares that they borrowed at these very, very low GameStop prices, and they're now selling them at these astronomical Reddit prices. So they started losing a ton of money. And as Reddit traders saw that happening, they started to double down on their buying, and it just kind of blew up from there. The stock ended January up 1,600%, which compared to the S&P 500, which is a basket of these 500 large companies, it was roughly flat. So that just kind of paints the picture of how crazy it was.
They started talking about buying other shorted stocks like AMC, BlackBerry, American Airlines, and Build-A-Bear.
Even Elon Musk tweeted at one point GameStocks, and the price of GameStop shot up. Just more evidence of how crazy it is that something so small like a tweet can have a massive effect on prices.
Retail investors began to realize just how powerful they can be.
According to market participants that I've spoken to, the losses are enormous, somewhere in the range of $10 to $20 billion.
Hedge funds, they're controlled by some of the richest people on the planet. And for the longest time now, they've had a lot of influence over the companies that, they'll invest in, which the more they buy up shares, the more prices typically go up because of the outsized demand. And they haven't really had sort of a counterparty in terms of the ordinary investor who can come in and sort of exert the same type of influence.
People who are looking at this situation, and there's this impulse called FOMO, and you've heard of fear of missing out. And that means you go and you do something because it's working out for everybody else. I don't want to get left behind. I want to make some money in GameStop. So just be aware that if you buy GameStop at prices, in the $200, $100, $400 range, you're not really buying into a company that's quote unquote worth that much. GameStop is way overvalued. So as long as this mania persists, you'll be fine. But manias don't persist. They end at some point.
The effects of the short squeeze were felt across the market, and hedge funds bore the brunt of the loss.
As these hedge funds have begun to unwind to cover their losses, they've been selling their winners in their portfolio. And you've seen a lot of very high quality companies sell off. And it appears like the factor there is that people in the hedge fund community are lowering their portfolios and selling wherever they can. And that's actually spilled over into high quality companies that really have nothing to do with this. In terms of the hedge fund community, I think that it may push investors to even more sort of tightly managed risk portfolios. And so for some of these hedge funds that may have done extremely poorly through this whole event, their risk may have been on the higher side. And so I think that people may sort of tighten up the risk. And so that would probably kind of lower the sort of returns for the hedge fund community because they're operating with a little bit more capped risk.
This brings up a lot of questions about trading regulations and whether or not the Reddit traders colluded or manipulated the market. And some remain angry that while hedge funds can regularly exercise large trades without much of a problem, these small traders were stopped when they tried to get involved.
If hedge funds and other Wall Street institutional types have been engaging in similar behavior to what the people at Reddit are accused of, why would you enforce some rules that didn't apply to the guys on Wall Street and the hedge funds before to the Reddit guys? Is it really a bad thing, or is it just what happens in the market? If you're in the message board saying, yes, the stock has $5 per share in cash on the books and trades at $3.50, I think it's a safe bet. Is that really fraudulent pumping of a stock? Not at all. That's it's a good fundamental analysis of it.
This dramatic short squeeze could have U.S. lawmakers scrambling to stop future market volatility.
In terms of market manipulation, that's maybe the most interesting and the hardest one to put a finger on, because this is all done on kind of a social media forum. And so it's hard to really point the finger at manipulation and a knowing recklessness that's kind of toes across the law.
Right now, it's definitely a lot of these online brokerages like Robinhood and Charles Schwab and others who have restricted trading that are getting the brunt of the negativity, the backlash, I would say, because they did, barred retail investors from being able to trade, and after they had like a noticeable influence on prices, which is something that hedge funds have been able to do for a very, very long time, influencing the market like that without much of a restriction. So I think there is a huge conversation around whether the market is essentially out to get the little guy. And that's something that, again, the regulators are going to be looking at. It's not incredibly unprecedented in terms of the outsized demand that's causing the price spikes. But again, just the fact that this is a swath of people who are trading every day, realizing they can have this type of influence on the stock market, that is pretty unprecedented.